What's going on, you guys? My name is Zach Hartley and welcome back to my weekly watch list video. Now I know it's been a little while since I've done one of these videos. I'm going to do my best to try and get back to a regular schedule with these. Sometimes it's just a little bit difficult spending 5 hours every single Saturday making these videos. But without any further ado, I'm going to do my best. Let's jump into this video and we are going to start off with the indices. First one here is the NASDAQ index. The thing that I want to point out in these videos is where we are relative to before COVID. As you can see, the NASDAQ index hit a high of around 10,000 right here. We rose up to 16,000 and we came right back down to 10,000 here. We've seen a nice little bounce over the last few weeks here, but it's definitely been a choppy market and it has been bearish for the last 6 months. When we look at the S&P 500, it's pretty much the exact same thing. We have seen a bounce off of the pre-pandemic levels of 3,500. The last 2 to 3 weeks here have been a little bit of a rally and things are looking decent. They're not looking great. It's not like we can officially say this bear market is over because we haven't really kind of set any new highs yet. But it is showing that we could be seeing the first signs of it. Now when we look at the Dow Jones, it is even more positive. We have clearly bounced off the pre-pandemic highs right here. We have rallied over the last basically 2 weeks here and we are now testing our resistance level that has been established over the last 6 months. So we are seeing some positive signs here and it's not like everything is doom and gloom. For instance, if you look at the energy index right now, it is very, very close to its all-time highs, or at least its 5-year highs. We got as high as 93.31 right here. We're currently at 89 right now, and this is doing extremely well. So there are pockets of the market and there are certain industries that are doing extremely well, energy being one of them, cryptocurrency not being one of them. As you can see, Bitcoin has basically been trading sideways for several months now, June, July, August, September, and October, and not a whole lot has happened. We have seen a couple of good signs over the last few days here, but realistically, nothing compared to what most people were hoping for when it came to Bitcoin and cryptocurrency. However, one major event has happened, and that is Elon Musk taking over Twitter. Elon Musk is a huge fan and supporter of Doge, so Doge has absolutely skyrocketed in the last 5 days. This chart is actually kind of crazy. As you can see, prior to the takeover, Doge was trading for around 6 cents per coin, and now it is trading at 13.3. It's up by over 100%, and absolutely pretty crazy here. There is no major support at 18 to 19,000, so I'll delete that. But I just thought I would point this out to you because if you could understand that Elon likes Doge, Elon is buying Twitter, Twitter is a major part of our online community, it's probably going to be a good thing for Doge. You could have got in early and just in a matter of a couple of days you could have made 100%. Now, this isn't necessarily tied to crypto either. You can do the exact same strategy in the stock market. If you notice that something is happening with oil or something happening in the housing market, all of these are just catalysts that you can use to try and understand what is the end result going to be and who's going to benefit most, and then you can buy that security. Now, this is just an example. When we look at other companies that are coming out right now with earnings, this is a big earnings season. We just had Apple, Google, Amazon, Snapchat, all those companies report last week, and Facebook fell off a cliff. Now we've got a bunch of new companies reporting this week. The ones that I am most interested in are SOFI, Uber, AMD, Airbnb, and PayPal. Those are the companies that I'm following most closely. We also have Coinbase and Block. We've got DraftKings. We got Etsy. We got Paramount. We got a bunch of different companies reporting. So it is going to be a very busy week, and there should be lots of opportunities. Now, before we dive into individual stocks here, let's just talk a little bit about what is happening in the overall market and the general economy. Starting with GDP. GDP numbers just came out for Q3. They were actually very positive. We were above 2% growth in GDP, which is very nice to see. 2 consecutive quarters of negative GDP are kind of what puts a company or a country, into a recession. When that ends, this is very good to see, and it's kind of the first sign that we're really starting to recover. So a positive GDP number that came out, very, very positive. The market also reacted very positively to it. It was one of the catalysts behind that recent kind of rally that we've seen in the last week or two. After that, we've got inflation. Inflation charts are starting to look really good, both in Canada and the United States. The reason I say they're starting to look good is because they're going down. If you look at the United States here, it capped out at 9.1%, then 8.5, now 8.2, and it's slowly declining. That means that whatever the government is doing to raise interest rates, it means that it's at least started to work, which is very nice to see. Inflation was a major concern for the last year, and at least it's going in the right direction. So it means that we could be at the start of that path back down towards hopefully 2%. Now, when it comes to interest rates here, very, very interesting. The Bank of Canada just raised interest rates by 0.5%, currently sitting at 3.75%, and the United States Fed meets this upcoming week, so in a couple of days here, and we are expecting a 0.5% to 0.75% rate hike, which means that interest rates are still going to continue. They're still going up, probably at least for another 2 to 3 meetings, which would put us at like the 4 to 6 month mark. So lots going on here, lots happening in the interest rate and the real estate and the financing world, and really realistically it's led by the increases in the interest rates that I'm talking about right now. Now, one thing to point out here though is that the largest impact of interest rates comes to mortgages. Mortgages, at least in Canada, only renew up to every 5 years, which means the full impact of these rate hikes is going to be delayed. It's going to take a little while, and hopefully we don't get a whiplash effect where we've actually gone too far and now we have to dial these rates back because the negative impact has been so harsh on the economy. So far we're not seeing that. GDP is growing, but it is a concern that we do have to manage. Now, after all of that information of what's happening in the market, what's happening in the general economy, here's my personal strategy. Number one, I am buying into industries that are doing well, and I am shorting industries that are struggling. There are some industries doing well, such as energy right now. That is a good industry. There are a lot of industries that are struggling right now, such as unprofitable technology companies that don't have a good runway. Those are the kind of companies that you want to be shorting. Me personally, I'm also holding a lot of cash. I plan to buy a property in the next 1 to 2 years. Hopefully when property values decrease because of the higher interest rates, that should give us a good opportunity to get in. That's at least what I'm planning for. So I'm holding my cash in whatever account I can get the most interest on through a high interest savings account as possible. So that's what I'm focused on there. I'm also building a long-term dividend portfolio in my RRSP, and I'm starting to day trade some of the earnings and some of the news that is coming out. I've had some success with it recently. I'll start posting some videos on that. But first of all, let's start talking about individual companies that I am buying into or that I am shorting. Okay, first company here is Brookfield Renewable Corporation. This is a company that is focused on renewable assets. They're doing extremely well. They have a 4.15% yield with only 52% payout ratio, meaning that they're only paying out 52% of their profits to maintain that dividend. That is a very healthy and safe payout ratio. Anything above 80 is where you want to be concerned. This company's doing extremely well. I also think that the stock chart has some major support right here at $40. You can see we bounced off it at the beginning of 2022. We are bouncing off of it right now, and the company has a price to earnings ratio of 12.55, which is extremely cheap in my mind. I like this company for an addition to my RRSP for the dividend. I also like it for a short to medium term trade on the bounce off of $40. So this one right here is checking all of my boxes. Another one that's doing kind of the same thing here is Power Corporation, POW.TO. They have been declining for the last 6 months here, but it looks like they're about to break out through this resistance. The stock is currently trading above both of the moving averages. It is paying a 5.86% dividend with a 56% payout ratio, and they are in the insurance and financial services industry, so they are not going anywhere fast, and they are also one of the owners of Wealthsimple. I like the company. I think it's steady. I think it's consistent. I think it's going to do well over the long term. Next one here is SOFI Technologies. This is a company based out of the United States. They have been beat down pretty hard recently. The stock has bounced off of $5, what I am calling 3 times now. Once right here in May, once right here in July, and again over the last couple of weeks. We are now trading at $5.45, and earnings come out on Tuesday. So if earnings go well, I think that's going to be a great catalyst for us to see this stock move higher. If it breaks above our moving averages here, I think that is going to be your entry point. It has been consolidating for the last 6 months, so I think it's kind of like a spring that is just being tightened and tightened and tightened, and I think there is an opportunity in SOFI. The revenue continues to increase. The company continues to do well. They're acquiring new users. I like everything about what they're doing. They're kind of checking my boxes. Now, one company that isn't checking my boxes, one company that I don't like, and one company that I'm actually planning on possibly shorting is Robinhood. They're also reporting earnings this week, and this company is burning money almost as much as they are bringing in revenue. I think the stock is going to get rejected right here around $12, and I think it's going to come crashing back down when they report earnings. I don't think it's going to do very well. I think if Facebook is struggling, I think Robinhood is going to struggle even harder. That's my personal opinion. I also don't think the economic events that have unfolded over the last 6 months, and especially the sell-off in the stock market, are good for this company in any way. So personally, I think Robinhood is going to like $7, maybe $6 again. We'll have to see what happens. Now the last company here is Intel. Intel is one of those just kind of old sleeping giant blue chip companies that nobody really pays attention to. However, it has sold off hard recently, all the way down to $25. It is currently at 5-year lows with a 5% dividend and only a 30% payout ratio. I am saying that this stock is starting to break out of this bearish trend. It has crossed through our moving averages. It is starting to set higher lows, and they had a great result on Friday when the company announced that they are basically trimming back on expenses. It currently has a price to earnings ratio of 10 and a price to sales ratio of 1.5. I personally think Intel is undervalued, both for a short-term play as well as a long-term dividend hold. Now, if you're interested in getting a little bit of free money and you want to start trading stocks, I recommend Questrade. That's where I pull all of these charts from. And if you sign up with the link down below, you'll get $50 in free commissions. If you're interested in crypto and some Dogecoin at all, definitely check out Noon. That is the platform that I use, and they will give you $25 in free crypto when you deposit $100 on the platform. If you're interested in getting invested in real estate, Addy Invest will give you $25 for free when you use that link in the description down below. You do need to buy a membership with them, but you get access to commercial real estate deals across Canada and the United States. I currently have a portfolio of about 7 or 8 properties with Addy right now, so I highly recommend it, and I am personally a user. Now, if you're interested in learning more about the stock market, how to analyze these companies and do your own due diligence and research, definitely check out my course on Skillshare. It is completely free. It is called Stock Market Fundamentals, and you get 1 month of free access when you use the link in the description down below. The course is 10 hours long and has over 14,000 students and over 400 reviews for you to take a read through. There's also over 2 million minutes of watch time that is being spent on that course. It's hosted on Skillshare as well as all of my other courses, so definitely check it out. The link is in the description to this video, and I promise you it'll be the best free resource that you can find online. Everything is down below. Thank you so much for watching this video all the way to the end. I sincerely appreciate it, and we'll see you in the next one. Good luck trading, good luck investing, and we'll talk to you soon.